best practices to fit your business needs and better serve your borrowers. Next slide, please. Here is our agenda for today. So we will start with discussion on impact of digitization and Freddie Mac tools to help support that. Leighton will then cover the use of digital data and best practices on implementation to gain process efficiency. And Mike will provide deeper dive into Lennar Mortgage's process and how they've managed to become best in class when it comes to digital mortgage. And then we'll have some time for Q&A at the end. Next slide, please. Okay, let's get started with cost to originate. Cindy, if you could just move us, here we go. So we recently published a study on cost to originate. And our report highlights that cost to originate has increased 35% in past 3 years. The landscape of market has changed due to higher interest rate, low volume, and change in production mix. So how do we make home possible in any market? How do we drive that cost down and address some of the pain points that you're facing today? And the answer is technology adoption. Many lending institutions are leaning into technology adoption to mitigate increases in cost and gain efficiencies. Lenders that can effectively implement digital mortgage along with the process changes can cut down cost by nearly 50%. And here's the interesting fact, based on our studies, there is a significant difference in origination cost between the most and the least efficient lenders. For the top 25% of the efficient lenders, the average cost is around $6,900. In contrast, for the bottom 25% of the lenders, the average cost is significantly higher at approximately $16,500. So this disparity really highlights the impact of operational efficiencies and the effective use of technology in reducing overall cost of loan origination. So it really pays to have that technology spend upfront to realize even higher benefit in the long run. Next slide, please. So let's look at our tools, right? Our underwriting tool, Loan Product Advisor, really enables you to automatically assess loan against Freddie Mac's requirement and help you underwrite with greater precisions. And over the years, we've really continued to add functionalities like AIM within LPA. So the manufacturing process becomes even more easier and efficient. So what's AIM? AIM really stands for Asset and Income Modeler, and it's a function within LPA that uses digitized data, either via third party or OCR data to assess income and asset. AIM benefits all stakeholders in loan origination, some from your borrowers, loan officers, your processors, underwriters, and QC team. It really helps you optimize efficiency by helping you close faster and reduce cost per loan, provides a smooth borrower experience, and helps you produce high quality loans. We just see about 40% fewer defects. And with reps and warrants, you are protected against repurchases. So if you look at it, it's a win-win situation for all parties that are involved in loan manufacturing process. Next slide, please. Okay, let's look at how AIM works. So AIM basically works in 3 simple steps. You order a report from third-party service provider like Finicity. You receive a report, And then you submit the reference ID from report to LPA. LPA then uses the reference ID to get the data directly from the source and then assesses income and asset, and it returns the result in the feedback certificate. Next slide, please. This is what we call our AIM menu, or AIM at a glance. So under our AIM umbrella, we have multiple offerings. We have AIM for asset, and it calculates funds using bank data. And then the eligible sources there are checking account, savings account, money market, investment accounts, retirement accounts, and gift and grants. AIM for income, like the name states, calculates income from various sources, like your asset data, payroll data, or tax returns and tax transcripts. So for today's purpose, we'll focus on asset and payroll data with Finicity, but we do have additional AIM service providers that support tax returns and tax transcript. And then we have AIM for employment that really helps you verify employment for a 10-day PCB, either with the asset report or payroll report. So for employment, we offer documentation relief, but the good news to share here is that we do have employment rep and warrant feature that's coming up in our mid-October release. And for all of these offerings, once you have a rep and warrant eligibility, only documentation requirement is to add a copy of a service provider report in the file, and then the report must be dated no more than 120 days before the note date. Next slide, please. So as we think about being more efficient and cutting costs down, and understanding that need of the market, our focus has really been to get more out of the same data source. You know, we understand that most tedious part of underwriting is verifying borrower's income, asset, and employment. And now we have a solution where you can get all that work done with one report and get your borrower to the closing table faster. The data in the asset report also helps Freddie Mac identify positive rent payment to qualify more first-time home buyers, or to qualify borrowers that have positive cash flow in their account. And Leighton will talk more on the power of one and how to use digital data effectively so you can take advantage of all of our offerings with the same data. Next slide, please. Okay, we'll dive into digital data, but next slide, please. So before I pass on to Leighton, I briefly want to touch upon Finicity and our partnership. Finicity is the AIM service provider who's partnered with us over the years to help innovate and advance digital products to bring efficiency in the marketplace. And as we talk about Power of One and getting more out of the data, Finicity now has credentialed payroll solution that will provide additional boost to your digital process. It's going to help you build waterfall solution that could span across our multiple offerings. So I'll pass on to Leighton to talk us through how to leverage AIM using Finicity products.
Thank you so much, Pratima. I'm excited to be here, and I really appreciate our partnership with Freddie Mac. Been a great partner, and it's really cool just to see this vision of, you know, LPA layering on AIM now really coming to life with just more and more solutions and you know, options available for lenders. And we're excited to talk today about Finicity and Mastercard Company's mortgage verification service, which, as Pratima mentioned, offers the asset report and payroll report solutions that AIM accepts. One thing, just a little bit of housekeeping to get out of the way, You've heard us mention Finicity and Mastercard. Um, and that's because Finicity was purchased by Mastercard several years ago and is now a wholly owned subsidiary within Mastercard. And you'll still see a lot of the Finicity name in the platforms and products that you use. Finicity is the registered credit reporting agency, the CRA within Mastercard. So Finicity Mastercard Company is how you'll often hear it referred to. Next slide. Okay, and what Finicity Mastercard Company does is provides consumer permissioned open banking data solutions. With that open banking data, you can do a lot of different things. AIM is focused on verification of income, employment, and assets. There's other things you can do with open banking data. Today, we're going to be focused, if you go to the next slide, on income and employment. Not to detract from all the other great things it can do. And if you have questions on those things, please reach out. Income and employment is obviously a very hot topic right now as costs are rising and lenders are looking to optimize and have the best product waterfall for not only cost savings, but also the best AIM results, right? And so we're happy to talk about what we think is a best-in-class solution to give you the highest income and employment verification rates through AIM as possible. Next slide. And the way we do that, the way we talk about it is there's two ways of verifying income and employment. One is a deposit income based or asset report based income verification. This is using consumer permissioned bank account data where you can see their bank account transactions. The industry is adopting that more and more for asset verification, right? You can see how much money they have in their bank account instead of collecting bank statements. Well, not only can you see how much money they have in their bank account, you can see that direct deposit going into the bank account. And underwriters today have been used to seeing that as they're going through. What they aren't doing is using that to verify the income. They're still ordering separate income products. And what Pratima is talking about here is with this one consumer permissioned bank data source, you can not only verify assets, but now income and employment as well. We also have another solution using payroll data. Similar to consumer permission bank account data, this is consumer permission payroll account data. And we'll show you some screens about how the borrower experience looks for permissioning bank accounts versus payroll accounts. The payroll income data comes straight from the payroll source and it has all the data points you're used to, the employment status, the employer name, the start date, the breakdown of the pay into base, bonus, overtime, other, commission. Okay, next slide. So we're going to talk today about more details on what these products look like. And then at the end, we'll talk about how you can implement both of them. That is the key question that we always get is, okay, you have two different solutions. Which one, where do I use which, and what's the best waterfall? So we'll talk about that. But first, let's set the stage for the borrower experience. So either in your point of sale or via a task or an email to the borrower, you can send them a link to permission their data. This is what it looks like to permission their bank account data. And it's as simple as searching for and finding your bank. Mastercard supports 10,000 plus banks in the United States, and then they log into their bank, similar to their online or mobile banking experience. It's that same login experience. Select the accounts they want to permission, and they're done. They can select multiple banks, they can select multiple accounts, and that's actually really key, especially as we're talking about using this data not just for asset verification, but income as well, that they're connecting not only the accounts where they have their assets for their down payment, but also the accounts where they deposit their pay. Next slide. As I mentioned before, once we get that account connection established, we're able to create an asset report. And on that asset report, we have the ability to identify the income streams coming into the account. So you can see this example here on the top right. Here's all the transactions coming in. They got a Venmo, PayPal transfer, and then they got their direct deposit. So we are able to identify that direct deposit and help you give an idea of how often they're getting paid and how much net is coming into their account. That data is all sent and aimed as the similar type of calculation. We really think this is the future of income verification. Freddie Mac is investing a lot of time and resources in making this really easy to use. And we are excited about it as well because most people direct deposit their pay. In fact, if we were all in a conference room together, I'd ask you to raise your hand if you direct deposit your pay. And I bet 99%, maybe 100% of us would be raising our hand. According to a survey from the American Payroll Association, 93% of employees in the US direct deposit their pay. So the opportunity is huge, right? There's no silver bullet for income verification, but if there is one, this will eventually get there is what we're hoping for. Really high coverage. As long as they're connecting their bank account, we can identify that income. Okay, next screen. So let's talk about the specific reports. Fatima's mentioned an asset report. There's a few different types of asset reports that you can choose from, and we will help you if you're interested on choosing the one that's best for your business. So we have a standard verification of asset report. It provides 12 months of transaction history to LPA, and it can be used for assets, income, rental payment, etc. Then we also have what we call a verification of assets and income report, or VOAI. It provides 24 months of data, and it provides not just the transactions and balances, it provides the Finicity identified income stream analysis to you. So you can get an idea of what those income streams might look like when you submit them to AIM, to LPA. That VOAI report is optimized for the success for best income results, but either one works. We also have a paystub enhanced deposit income solution where you can send a paystub, a borrower collected paystub to us. We digitize it and package it up with the asset report data, send that to LPA for you, and it further increases your chance of AIM income assessment. Okay, and then last we have a pre-close VOE option. So now when you're coming to do your pre-close VOE, your PCV, you have to re-verify that employment is still active, right? You're used to calling employers or paying for expensive solutions. Well, with this solution, you can now refresh that data that the borrower is connected to without engaging the borrower again. You refresh it and you get updated data to confirm the borrower is still getting their direct deposit on the expected cadence. Now, most lenders don't want to refresh that asset report because it may kick up new asset or income data. That's a viable solution. You can refresh the VOA or VOAI report to meet that pre-close VOE need. Or what we have built in conjunction with Freddie Mac is a separate VOE transactions report product. That VOE transactions report just provides the information necessary to you and LPA just to verify employment is still active. If you could go to the next slide. Gives you a little bit bigger of a view of what that looks like. This report is very similar to the asset report, but all it has is the direct deposit transactions with no amounts. You can see on the right-hand side of the report, normally there's amounts there, so you can underwrite the asset and the income amount. For this, we're just verifying they're still getting a direct deposit on the expected cadence. So if they're getting paid every 2 weeks, we expect it, if it's been 30 days, that's not a good sign. If it's been 10 days, yeah, but they're good. And this is really exciting. We're continuing to expand the adoption of this. We hope that this is exciting to you. A lot of our lenders get excited about the upfront at origination asset and income cost savings, but here we can also help you with the pre-close verification of employment cost savings as well. Okay, next slide. So now let's talk about payroll data. Two solutions. End goal is the same, income and employment. With payroll data, it's the very same consumer experience, but instead of searching for and connecting to their bank account, they're searching for and connecting to their payroll account. And the cool thing about this is, some consumers don't know their payroll provider, the payroll provider their employer uses. we have a lookup in the system where you can enter an employer name, and we have mapping to know what payroll provider that employer uses. When they're logging in to permission their payroll data, it's the same login experience they would need to do today if you were to ask them for their pay stub or W-2. Most borrowers these days don't have their pay stub or W-2 printed out, ready to go. They have to go log in to their online employer portal or payroll provider to download it. It's that same exact experience. Logging into that, the thing that's nice about it is it's done within your loan application experience. Instead of sending them off out of line to get it themselves, grab documents, upload documents, potentially have to get new documents. We have so many underwriters saying borrowers give them the wrong pay stub, or they only give them one pay stub, they need two. We're getting rid of all that. Connect to your payroll account once and you're done. Borrower can move on with the day, and we establish the connection and deliver the report to you. Next screen. And similar to our asset reports, we have, with the payroll data, we have an upfront income and employment report and a pre-close VOE payroll report as well. Within a certain time frame, these reports can be ordered for one charge. You order the upfront one, we have a window, and if you refresh within that window to get that VOE, it's all one charge. So we're really trying to make things more cost effective for you here. Okay, let's go to the next screen, which is where we're going to start talking about how these solutions can be combined. Obviously, they're two different solutions, and end goal is the same. So common question we get is, how do we implement them? Now, there's two ways we're going to talk through today, and we're happy to, if you're a customer of ours, hopefully you feel this, we want to partner with you to get the best solution for you, and reach out to us. If you're new to Finicity Mastercard Company, as you're engaging with us, we'll help talk you through and customize a workflow that works best for you. But here are a couple that we've seen lenders be successful with. So one is leading with deposit income. It's really taking advantage of the power of one report and cost savings associated with leading with one product, and it's that asset product. The borrower is connecting to their bank accounts, you're generating that VOA or VOAI report and submitting it to LPA. And potentially with that one report, you get asset, income, and employment verified, and you're done. No need to order any other products. Now, there's some times where the borrower's income isn't able to be assessed. Say they just started the job, and the transaction history in that bank account wasn't long enough, or maybe they're getting a paper check that's not being deposited into the bank account. There's a few different reasons that a borrower could fall out and the deposit income would not work for them. So we highly recommend having a fallback option to order that VOIE payroll report product. That can be done as a borrower task or email. Think wherever you have the borrower task to upload a pay stub or W-2 today, replace that with this product to order a VOIE payroll report. And we support putting that experience in a borrower portal and an in-band experience, or as an out-of-band email task to the borrower. Either one works. You'll resubmit to LPA after you get that payroll report to get the income excess. So it's kind of a potential two-step process here. Pros and cons with this one: we really like the cost savings associated with it, and the potential to have borrowers just connect one data set and they're good. Let's talk about another option though. Some of our lenders don't like the potential to have to go back to the borrower to connect payroll accounts. So another way to implement this, if we could go to the next slide, is to do both deposit and payroll income upfront. And this is where the borrower in the loan application would connect their bank accounts and their payroll accounts. This essentially means you have two horses in the race for income, right? You can submit both to LPA, and what's really cool about AIM is it can take multiple data sets for one borrower, and it will message back on the one that provides the best result. It's looking at the borrower's stated income amount on the IRLA and matching it to what they see in the bank and payroll data, and it will give you the best match. This one's great because you don't have to go back to the borrower to do anything. You've done it all up front. So two different ways of thinking about implementing these products: deposit income, payroll income. Like I mentioned, we have lenders doing both successfully. And whatever makes most sense for your business, we can help you with. Okay, let's talk about best practices. I've already talked about a few, and I just want to, recap them a bit here. And then we'll turn the time over to Lennar to talk a little bit more about how they've implemented these products in a more specific way. So the income product waterfall, it's what we just talked about. We have unfortunately a lot of lenders that have implemented new solutions, whether they're ours or our competitors, to be honest, and they don't optimize their workflow to make sure that they're not ordering unnecessary products. They'll put a new product in their workflow, but keep the old one in there, and then there's a double ordering situation, etc. So what I just talked about of optimizing your product waterfall, it's really important, and we really want to help you with it. So please talk to us and think a lot about this. Next one is borrower preparation. That borrower feeling comfortable with connecting their bank or payroll accounts is really critical to the success of this solution. Younger borrowers, you hardly have to talk to them about it. They all want it. In fact, there's several studies out there talking about younger borrowers wanting more and more digital mortgage solutions. Older borrowers, depending on the type of borrower, you may need to have a conversation with them, or at least in your point of sale user experience, make sure that they're aware of the benefits of connecting their data. It really helps them a lot, right? Instead of having to track down documents, connect your data, you're done. Measure and share success across your organization. Freddie Mac has awesome AIM utilization reports where you can see over time how you're doing with what percentage of your loans was using AIM. We highly recommend keeping an eye on that. Also talking about the costs and time savings, sharing that across the org. A lot of times one part of the organization is excited about these solutions and another part isn't. If the whole org isn't on board, you won't have a best-in-class solution. Okay, leads nicely into the next one about incentivizing your entire team. There's benefits to this to the whole ecosystem: loan officer, processor, underwriter, everyone, and helping them realize that this not only helps loan officers get more loans in the door and have a better borrower experience, it helps the processors with not having to track down documents as much, helps underwriters by providing rep and warranty opportunities, etc. And then lastly, loan officer trainings and resources. Obviously, that loan officer to borrower connection is super important to make sure that they can answer borrowers' questions about the products and incentivize the borrower to connect their data. Again, we're here to help you through these implementation best practices, and we're excited to hear now from Lennar Mortgage, from Mike at Lennar Mortgage, who can talk to us about how they've implemented this, and they have a really awesome AIM utilization, and it's why we're excited to have them here today to talk about what's really possible with these solutions. Mike?
Hey, Leighton, thank you very much. You did a lot of heavy lifting that I hope to piggyback off of, so I appreciate that. Thanks to Freddie Mac and to Finicity for allowing me to be a part of this today. My name's Mike Sikra. I'm here today because we really believe in the power of this process. Ultimately, we want to create a better borrower experience, and we believe by utilizing these items, it does create a better borrower experience for our buyers. Next slide, please. While I am going to walk through the advantages to our associates and our buyers, and our organization for that matter, we thought it would be important to begin with displaying our success in implementing these items and gaining adoption from our associates across the board. So as you can see, this chart demonstrates some of our success in implementing, but I will tell you that implementation for us it's a point of pride. We really start off with our loan officers for what's in it for them. Obviously you always want to relate to the individual and how it can benefit them and help them throughout the process. But we've gotten to the point where we've transferred from, kind of what's in it for them and made a culture change where loan officers now sell the benefits to each other or their peers. So that's really when we know that we've done a successful job implementing, is when our associates carry the baton forward and really teach it to each other. And that's when we know we've done a nice job. So the next slide, we'll go over how our buyers even access this. So in some of the best practices that Leighton was speaking of, it was, how do you get this in front of your borrowers? How do you build trust? How do you do those kind of things that make it easy for them? And really, our goal with implementing this product was, let's make it as easy and natural as possible for the borrowers so that they do feel comfortable with providing this information. So Leighton discussed a couple different ways to implement. And one of the ways that he discussed was leading with deposit income, which is what we do. We embed this process directly into the pre-qual questionnaire. So while our buyers are applying for a pre-qualification, it's important to connect your assets feeling like it's part of the natural flow of the process. So we also have, within that process, we have some tips or some quick tips on there that says, like, if you choose to import your assets, we suggest to connect assets that contain your direct deposit income. That will help out with a little bit fewer documentation down the road. So that's how we do it in the beginning. That's how our buyers access it. I can move on to the next slide, please. Okay, so you can see this slide shows some advantages for buyers and for loan officers, and for that matter, it's processors and underwriters as well. It really has benefits across the board. What point I would really like to get across is that our loan officers love when buyers have their assets imported and their income verified. Not only is there fewer documents throughout the process, it makes the loan process a little bit simpler, but also we get more approvals and more closings. I'm going to pause there for a second. More approvals and more closings. So let me explain. Picture a buyer that has less than 2 years employment history. You're thinking here nurses or contract employees, something like that. I'm sure you all come across these types of buyers. So these people may not qualify under traditional underwriting standards because they have, less than 2 years of employment history. But with asset and income verification, we routinely see approvals on these situations. And this probably goes without saying, but more approvals and more closings lead to a better experience for all, and everybody wins. So the last slide that I will go over here, so you can move on to the next slide, please. This slide explains advantages that you may not initially think of when you're considering, moving to these products or utilizing these products. At Lennar, we have something that is probably similar to a lot of the folks on the call. We have underwriters in training. We have senior processors that are looking to be underwriters, and we call it the elite program. So the elite program with us, these are senior processors that have the ability to clear non-income related conditions. So if we have asset and income validation on some of these files and loans, we can fast track those to closing. And that is a huge advantage for the customers, for the underwriters, and for the processors themselves. Also, the second point on this slide is our quality control doesn't have to re-verify source data obtained from a third party that is already validated. So they don't have to go back. Like many others, our quality control department reviews a subset of loans, and in those loans, let's call it 10%, they might have to recalculate all the income, reorder BOEs, just do all the normal checks and balances they would have to. If that happens on 10% of loans, we have AIM validation, we can theoretically save that time and effort and ultimately money, of course. So I hope that in my brief presentation here, that you could tell that we are big fans of this. And it ultimately hits the bottom line. And our closings from 22 to 2023, we increased our closings from Lennar Mortgage by 9,000. And this process plays a part in that whole thing. So I really want to thank everyone for listening. Thank you for including me. And Cindy, I believe we are ready for questions.
We are, and thank you, Mike, for that information. We have had a lot of questions coming in. I know some of our folks have been responding on online, but let me take a look and see. Let me go into our questions. Okay, we have actually a question for Finicity, and also just an FYI, the question Q&A will be handled by Finicity and Freddie. Can Finicity be integrated with Blend?
Yeah, I can answer that one. Blend typically does not have third-party verification services embedded in their solution. They have their own proprietary solutions. So the short answer is no. But we are embedded into other loan origination systems. So if you're using Blend for your point of sale and another loan origination system like Encompass, you can use our solutions out of Encompass.
Okay. And this looks like another question. What percentage of Finicity inquiries yielded in usable data that LPA is able to use in rendering a decision?
Yeah, that's a great question. Part of it, we've talked today, like in the Lennar AIM utilization, right? That means that there was a report associated with that loan. Now, whether that report provided an asset or income relief is another double click. And as we look at our lenders, it varies greatly by lender on what percent of those reports are usable. Now, I'll just say this, when the borrower connects their data, our ability to generate a report is extremely high, right? It's like high 90s. If they connect their data, we can generate a report that can be used to help with your underwriting and loan documentation, even if it doesn't get an LPA rep and warranty result. So not a 100% answer. It does vary a lot, but Freddie Mac does have some great reporting that we can dive into on a lender by lender basis.
Okay, great. Actually, this is a Freddie question. I'll ask as I'm going through all the various questions. If I try and verify employment from the asset or payroll report, will it impact my underwriting results?
Mute myself. No, great question. And we hear that a lot, right? When you do refresh a report and you run LPA then kind of does the risk assessment, again. So that's where like if you refresh it, Leighton talked about that solution at the end to really verify employment, then you can use that VOE transaction report so that your asset and income underwriting decisions are not impacted.
Okay, thank you. I'm going now into the chat, some of the questions that were asked. Is there a difference in cost between VOA and VOAI?
Yes, there is. The VOAI provides more data and more insight, so it's slightly more. It's not a lot more. So yeah, as I mentioned, you can have success with the cheaper VOA product. There is a little bit higher success to be had with the slightly more expensive VOAI product. We also have a bundled product that you can get our VOAI report, the pre-close VOE, and our pay stub enhanced report all in one cost. So I'd recommend you reach out to us if you have questions on that. If you're an existing customer that's looking to upgrade to a different product, or you're a new customer, and we have in the chat and in this deck that will be sent out afterwards, a link to how to reach out to us.
Yeah, and Leighton, I'm going to add to that because I did see a question on bonus and overtime. So, like the VOA report, like for some of the income types where we require less history, so VOA report, definitely we can go in there and calculate income. But if you're looking to like calculate bonus overtime, like, that type of income coming in, then, we require like a longer history. And so you kind of get the full benefit of the direct deposit offering when you order the long history report.
Okay, thank you. These questions are coming in. Everyone's got lots. Question from Doug. Given the latest data breach with MC2, how are you talking to consumers about their data security?
Yeah, that's a great question. It's helping the borrower feel comfortable with sharing their data is key. And anytime any big company has a data breach, it does cause them to second guess all companies. Now, what's really neat about the Finicity being acquired by Mastercard is Mastercard has a great track record for not only brand recognition but also trust. And so I do like, and our borrower experience has the Mastercard branding in it. So reassuring them that that their data is protected with Mastercard level security, the same type of security that they're used to, they expect with their credit card transactions, So we actually have an in-house lender trainer that can go in front of your loan officer group and help you cater borrower talk tracks for common questions. So this is just a kind of a preliminary note here, but we do have additional resources to help you answer those type of questions. It's a good one.
Okay. Carolyn is asking, what data point is being used to determine the close by date for employment? Is it based on the asset report date or another date?
I can take that question. So you could get, like the verification of employment via either asset report or income report. So we just look at like the last deposit or date on the paycheck to really determine that close by date.
Okay, great. Okay, Angie is asking, we use TrueWork and they tried to get borrowers to link employment to get our VOIs, VOEs, and it is sometimes a struggle, especially when there is a two-part authentication factor that has to be done. Any experience on if that is an issue for you?
Yeah, and similar with bank accounts access there, and we've put a lot of time and resource into making that work, right? So we're putting the borrower through their bank account or payroll account connection experience, and that payroll provider or bank may require a two-factor authentication. I would say the bank part is golden. We hardly run into problems. The payroll is a little bit newer, and sometimes there is issues, but our solution does handle multi-factor authentication. And so I encourage you to check it out and compare it to what you're doing with other vendors today. And we think it's top of the industry. So
Okay, thank you. All right, Drew is asking about our competitor. Fannie Mae recently announced a process where DU would auto-refresh direct deposit history in the background, provided that asset data was already provided. No formal refresh required. This would then extend to the VOE close by date. Does Freddie Mac have similar plans in the works?
I can certainly take that back to the product team. We have not discussed that solution yet. So.
Okay, thank you. Understanding that the successful income R&W percentages would vary per lender, but do you have a general overall rate of acceptance for R&W?
So that varies lender by lender and not something that we share. But if you are interested to look at, like, because it depends on offering and how you're pulling a report. And Leighton kind of talked about like looking at our data more closely. So we can kind of take that offline if you want to just reach out to us and do a peer compare, and we can share that data with you via the reporting and give you like a comparable with your peer.
Okay, thank you.
And one thing I just wanted to just say again, I think I put it in the chat, is whether you get a rep and warranty result, the report may still be eligible to be used as loan documentation to replace the need to collect borrower documents, right? So, rep and warranty is awesome, but there's also additional benefit from digitizing the mortgage process, even if you don't get rep and warranty. Would you agree with that statement, Pratima?
That's correct. Yeah, with the payroll report. And then when you do run it through, the other thing that we talk about is like LPA, when you don't get rep and warrant, does give you a little bit more insight into why, right? So it might kind of help with that underwriting due diligence as well. So there's benefits there.
Okay, and actually to continue on the rep and warrants, Laura asks, do we get reps and warrants if a borrower quits after the last payroll deposit, but prior to closing within the 10-day period?
Oh, that, you see, you're still on a hook to like that doesn't change, right? Because as a lender, the continuity of employment, that's on you. So, but I want to kind of take that specific question back to policy. Cindy, if you could just like highlight that.
I will. Okay, give me 1 second while I do highlight that. Okay. As we go on, let me take a look and see what we have. Is there an income amount calculated within Finicity based on the different approaches mentioned? Or does the lender complete the calculations still, and within what LPA sees then D1C is obtained?
Okay. Yeah, for both. Okay, so for the payroll income solution, identifying the income amount is very easy, right? The gross income is provided in the product, broken down into base, the IRLA categories. That's great. You can use that to auto-populate the IRLA and have the borrower confirm that it's good. Deposit income, right, is the net pay. And so there needs to be a gross up logic to match a borrower submitted income amount. And so for that solution, what we recommend is the borrower states their income, and you submit the report to LPA, and LPA will do their proprietary gross up from that net on the report to the gross up on the, and then see if it's within tolerance of the borrower's stated income. We do provide the Finicity gross up estimate, but what matters for LPA is their own proprietary gross up logic.
Okay, thank you. What if my deposit is split between 2 bank accounts?
Okay, so I can take that question, right? As we talked about, like best practices upfront, as you coach your borrower, it's important to have that conversation so both of those accounts are linked when you go through the verification process.
Great, thank you. And this is a question that was asked in the Q&A, but and it was answered, but I also want to ask it just so everyone has the answer. How quickly do these reports generate? Is it immediately, 1 day, 2 days?
Yeah, the asset reports typically generated in 1 to 3 minutes. Average is closer to 1 minute. And then the payroll report takes a little bit longer, 3 to 15 minutes. Average closer to 10 minutes. So both quite fast, and we're always working on making it even faster.
Okay, great, thank you. Okay, I'm looking through our questions, and I do believe that we've responded to most of our questions. Actually, let me ask this one question for Freddie. If I have a borrower with two employment records, is there a chance that only one of those records gets assessed using digital data?
Yeah, so we have a concept, right? Like we have a concept of like partial rep and warrant. So if we only find one employment, let's say on the direct deposit, we'll kind of go in there and we'll say we're good with that particular income. And then we'll message back to say, hey, like there's additional income noted in the application, get a documentation, right? Because we've not been able to calculate that income. Yeah.
Okay, thank you. And then it looks like Norma just snuck one in. What is the best practice if the employer name is different than the name of the direct deposit payroll company?
Very, very good question. And we've run into that a lot. So an LPA spec, there is a employer AKA field. So what we kind of coach is, hey, if you have run into scenario where, you know, like your payroll deposit is different than what the actual employer name is on the application, to pass that field, the employer AKA field, and we'll be able to match that on the back end. Otherwise, you know, if it's not there and we go in there and we can't like match those to employment, you'll just get a message like stating, hey, we're not able to match the employer. So
Thank you.
Fatima, I do want to follow up on that one. If it's not an exact, without that AKA field, it doesn't have to be an exact match, right?
right.
Doesn't AIM has some lot, you've seen a lot of this data over the years and you've built a kind of logic to know, hey, this is what this employer's paycheck looks like, right?
Yes, if we have that information, Leighton, we can do it. But like in some scenario, like we might not have that. I recently ran into one of my seller, like, you know, trying to do that. So the best practices is like, if you have it, just send it in, right? And we do our best to match it and assess that income.
Okay. And Norma is following up. Encompass doesn't have that field. Could we use the payroll company as the employer in the field and have the actual company in the attention field?
Good question, Norma. I might have to take that back to the Encompass team because I'm not familiar with the LOS and how that field is passed. So I can definitely reach out to you separately once I have that answer.
Right, and I am making a note of that right now. One of the questions we talked about asking, let me take a look and see, is what if the borrower switched jobs in the last 12 months?
Great question. So if the job's been switched, you know, like we can chain both of those employment, but we need at least like 6 months with a new employer, so that we're able to chain it. And like if you've just recently switched it, like AIM might not be able to chain that.
Right, thank you. All right, I do believe that we have gotten to all the questions. I've actually recorded all of the questions that have come in, and we will respond to anyone that we may have missed or we have to follow up with. Do you have any follow-up? Not to put you both on the spot, any follow-up though from our speakers? I see smiles. So they've answered
Great
a lot of the
questions.
questions.
It really, the
Yeah.
amount of engagement on this
Yeah.
this webinar has been great. Please keep it going. Reach out to us offline.
Yeah.
Look at these resources. We're about to share some resources with you where you can learn more as well.
Yes, and yeah, that takes us to, again, you all receive copies of these slides, but here's just some Freddie Mac resources, along with some Finicity resources. And just to follow up with everyone, that's all the questions that we have time for today. Like I said, if we didn't get to your questions, we will reach out to you following the event. Be on the lookout for a follow-up communication with today's presentation, and make sure to explore these resources to help you optimize your automation capabilities. Thank you all for joining. We had a lot of people, a lot of good questions, and we will see you next time. Thank you.
Well, thank you.